So in the group call, we had a discussion about the position management of trades and some of the psychology involved in that. So what I'm about to show or explain is not necessarily a trading system, but it is a way to handle one of the most common issues, and that's fear of loss. Now, nothing's perfect, so let me start by saying that. But you'll see, and this is a typical setup. This is a 4-hour chart in dollar yen, and you can see that right around the 156 yen level, we had found support multiple times. Now, the entry itself isn't so important. That's not really what I'm getting at here. What I'm talking about is how to handle the position once you are in it so that you don't go on tilt later. One of the biggest problems that this person and quite frankly myself have had, you know, over time is what will put us on tilt quicker than anything else is taking a quick and brutal loss. It's the velocity. So one way to get around that is to slow the game down. And in this particular case, I am looking at this through the prism of perhaps a short, and I will take the short and say short the dollar yen right there. Now, this is a break of support. It makes a certain amount of sense. But instead of risking my usual, and we will just kind of guesstimate here, the account size again doesn't really matter. It comes down to your risk tolerance and basically it's a fractal. So what I'm going to say here is 0.25 on this entry. So what that means is if your usual trade size is $1 a pip, for example, you're going in at 25 cents a pip. Now notice the market goes in your favor and then it comes back against you. And this sometimes is where traders get into trouble. Now, a couple of different things can happen here. Worst case scenario, you put this order in and it goes straight against you. And at that point in time, you're losing a quarter of a pip. Let's just say your risk tolerance is 1%. So you've lost a quarter percent. Irritating as it is, it's not fatal. And that's the point. But notice how we drop. We go against the position and then we drop it again. And then we go against the position and then we drop again. So in his particular case, I suggested that when it goes against you and then breaks down in your favor again, so that would actually be somewhere right around here, you add another quarter. So it goes against you again, just like it did previously. But at this point in time, it's 50 cents a pip or whatever, half a position. If it goes against you and you end up being wrong, you've lost half your allotted risk for this trade. But notice once we go against and then we break down below, I'm not adding yet. And this is because we've formed a little bit of a support area here. So once you break this, then you could possibly do it again. Now you're at 3/4 position, somewhere in this neighborhood. Again, it goes against you, but notice how now it's starting to respect this area that got you in to begin with, and you should be paying attention to it. We rally and we fail. You're going back into profit again. You didn't make a fresh new low, but you could have put a full position on a break of this. So really what you're doing Anybody who's traded for any length of time will recognize this as basically just building a position. Now you're at a full position. Your price, your cost basis is going to be somewhere in this neighborhood. You are at a full position. You do not want to lose more than your allotted full position anyways. But a couple things are going on here. Number one, your stop loss wouldn't be up here anymore. It would be maybe down here. And that's fine, because worst case scenario, you just take the loss that you would have taken if you just jumped in. But notice this gives you plenty of time to take advantage of this trend. And now, as we move along and you break down below here, this is a judgment call, but at this point in time, maybe you want to go closer to break even. So now you're not risking that full percent. Notice how we break down below here. You could have gone short again, but it really comes down to what you're comfortable with. You certainly could have gone short again once you saw it go against you and start to head in your direction again, back below there. And that's, for me, is a little bit more comfortable, because the market is not only breaking down below here, but what it's doing is it's coming back in. It's showing you it can't get above there. So it takes a certain amount of patience, but you could have shorted there. And you'll notice that you're now at 1.25 size position. And you could do it again and again and again, and then you just trail your stop. The problem I think most retail traders are going to run into with this is that there will be times where you take losses and they'll say, well, this doesn't work. And what I will say is there's a really high chance that your losses are going to be 0.25% instead of a full percent. Can you make more money just jumping in with a large position? Yes, of course, but you can also lose a lot more. And this was more about taking a situation that a particular trader was having trouble with, and one that I've had trouble with multiple times, where, let's just say you're shorting this pair here, for whatever reason. The setup really doesn't matter. And then it just launches against you. There's something about that puts a lot of traders on tilt. It's being wrong, and very wrong very quickly. So this is one way to combat that. You just basically, you enter the position, and if it keeps going, it keeps going. It's fine, whatever. It becomes a small win down the road, whatever. If it goes back against you and then proves your thesis correct by going in your favor again, that's when you add. And you also don't have to do quarters. You can do a third of a position, 0.33, 0.33, and then 0.34 to make it a full position. You could play with those numbers, or you can make it 0.2 and do it in 5 sections. This is something that you have to demo, and you have to think, okay, well, what's right for me? At the end of the day, it's about accepting losses. And sometimes, and in this case, it might even accept the fact that you were dead right. And, you go long here on this breakout for whatever reason, and you only have a quarter position on. Well, I mean, it doesn't really pull back enough to prove your thesis right. It just launches. And that becomes a completely different trade. But if you didn't do anything with that, worst case scenario, you had a smaller winner. This is one way to get around the psychology of it. Because at the end of the day, really what happens with most retail traders is they have one or two really bad psychological breaks from their system or their trading philosophy, or even just lose their discipline once or twice, and they'll do irreparable damage to their account. So maybe this is a way to do that. For you, I would definitely test it. Another thing is it teaches you patience. And when you're trading Forex, it's easy to look at the chart here on the daily chart and say, well, there's a shooting star, and then we had this big, nasty, impulsive candlestick here. And in fact, this is where I just did that example. I could have just shorted that and wrote it all the way down to 140. Well, you didn't. You didn't write it 16 handles, but that's really where the money is. So that's why it's okay to scale in. It's okay to be casually adding, drag in your stop loss. Most people aren't going to get that entire move. This bounce here probably takes out whatever stop losses you have. That's fine. You're still talking 6 and 7 handles here. So anyways, this video is for the people in my group. We had that chat. I just wanted to explain this and show a couple of examples of what you can do with this. And again, this is a framework. This is not a system. So you may find a tenth, etc. You may find maybe just splitting it in half. You may find a little bit more aggression, a little less aggression. For example, when the candlestick breaks down below the support level, maybe you need a full close. And if you're trading the daily, the support level got broken, and you needed to wait till the end of this day to feel comfortable. That's fine. You put a quarter position on, or a third, or whatever. You have your stop loss up here. It goes against you, but once it goes for you, you add another increment and you continue to go. Where I have found the most success is when you do this and you add and add and add, but let the market tell you when it's time.